Let me go ahead and pull up the.
Mark, you're going to have to watch the grab tabs. I've lost the grab tab for the moment.
Okay.
Well, I do see that Itana had a question about Abbott, so I can respond.
Yeah, go ahead.
To that. She does.
Repeat the question first. Yeah, go with the question first.
Right. She mentions Navalier's free stock grader and some grades that it gives, mixing fundamentals with technical analysis. And I'm not familiar with the, although I occasionally look at similar reports. I'm not familiar with Ned Davis, so I can't really comment on the operating margins growth grade, the earnings growth grade, and the earnings surprise grade. Those would all be fundamental factors, but I don't know how Navalier grades, so I can't comment on those. I would just say from our grading system, my grading system, their profit margins are steady to up, both on the net side and the pre-tax side. I did not have a chance during the session to take a look at the operating margin, but that usually comes pretty close to following the pre-tax margin. Her fundamental question that I noticed in there refers to erratic price growth, and how do we reconcile this being a sleep-at-night company with erratic price growth? And I beg to differ on terming it erratic. I quickly looked at the variances in price over the last 5 years. The last 52 weeks from high to low was 21%. Back in 07 it was 19, in 06 was 20, in 05 was 26. That's pretty non-erratic. Seeing 50 to 100% is not unusual for companies. So actually they're quite stable. Notice I've skipped 2 years, 2009, 2008, the two most turbulent years most recently, and there the variance did jump up a little bit to 28 and 26%. So I would differ it with calling it erratic. It's very sleep at night to me. Now perhaps what Atana is referring to is the fact the price has not increased a whole lot over the last 5 years, and that gets back to the point that I first made, makes it an attractive company for me. If the price hasn't increased a whole lot, but the business fundamentals look solid, it looks to me like the market either overpriced it 5 years ago and it's now getting back to a reasonable price. I think a little bit of that's the case with Abbott, or it's overreacting to near-term issues, and I think that's really what's driving Abbott right now. It's selling at a PE of around 10 or 11, which is lower than it ever has in any history that I can find on Value Line or in the S&P data files, or now Morningstar data files, I guess.
Yeah.
So
one thing I might add, Si, and I agree with you. Anytime you're dealing with Mr. Navalier, and I love Louis, you almost have to look at the world through the prism of momentum investing. And I don't know specifically how he does this stuff. He does have a book out if you want to read it. He really does court momentum, and a company like Abbott is just not a very high momentum stock in his world of investing. So that would probably account for some of the lower grades. So just keep that in mind when you look. I see Dan Hess has his hand up.
Mark,
I'm going to go ahead and go to Dan.
Okay, Mark, I've gotten everything back so I can see it also, so I'll be able to get your questions in a moment here, okay, as soon as you finish with Dan.
Go ahead, Dan. I've unmuted you.
Yeah, I was just going to comment on Hugh's selection of Cisco. Okay. I certainly agree with his selection, since I bought some more last week also. But there's a couple comments I'd like to make. One is Cisco currently doesn't pay a dividend, but a couple months back, John Chambers, the CEO, said that Cisco would pay a dividend by the end of this fiscal year, which is June 30th. He also stated that the amount of the dividend would depend upon the ability to repatriate some of their foreign profits back to the U.S. to pay the dividend. On December the 15th, John Chambers was one of the CEOs that met with President Obama, and he raised this question to the president, and Obama delegated it to Tim Geithner to look into. So I'm hoping that we'll see something about repatriating the foreign profits of corporations that will enable Cisco to pay a dividend. The rumor is that if nothing happens, they'll pay a 1% dividend in June, or if they're able to repatriate the dollars, it'll be a 2% dividend. Second point is...
Thanks for that. No, thanks for that, because I saw a lot of chatter on the internet a couple of weeks ago, and I was wondering what triggered it.
Yeah. Second point is that the last quarterly meeting, they indicated that desktop boxes sales were down. And I recently, a couple of weeks ago, I guess it was over Thanksgiving now, I bought another HD TV. I needed to get another DirecTV HD box, which is one of the boxes made by Cisco. Actually, they bought Scientific Atlanta a couple years ago, I guess. Mm-hmm. And what I found out was that DirecTV has a shortage of set-top boxes. They couldn't get enough to meet their demand. So I'm thinking that in the future we're going to see Cisco saying that their sales of set-top boxes has greatly increased. The last point is that you mentioned their margins are declining, and if you look a little bit closer, you know, they've had the router business, which is pretty much a monopoly business. They've been able to get very high profit margins on their routers and their switches as well. But now they're getting into other areas that are more lower margin areas, and they're actually going to have to compete on lower margins. So I think that's part of their growth strategy, is they're going to have to accept lower margins to get into that. And longer term, Cisco is one of the companies that's trying to get into what looks like a very lucrative future, longer term area of the cloud computing area, provide the internet working for cloud computing. So I think Cisco looks cheap now, and they also should have a long-term future. I don't know who's going to win the cloud computing war, but Cisco's sure going to be in there fighting. I'm sure.
Yeah, I would argue they're already there in great measure. So, thanks, Dan.
Well, I meant the volume. The high volume business is not there yet, but they're all putting prototypes in now, and we'll see who gets the war. It's between Oracle, Microsoft, Google, IBM, and a few others. Mm-hmm. Dell, I guess, is there too.
Very cool. Let's go ahead and go to Susan Tano.
Mark, we have a question. Okay, we have a question from Susan Tano, Mark. She wants to know where can we contact someone to pay for this club subscription for Manifest Investing that you were talking about?
Either contact me by email or call me. I'll give you the phone number at our office here is 312-224-1698. That's 312-224-1698. And
then
we'd be happy to talk with you.
Susan also has her hand up, so she maybe has a follow-up. Mark, I'm going to unmute her.
Absolutely.
No, she took her hand down, Mark, so we're going to go to Herb Lemkel, whose hand is up. Herb, you're unmuted.
Yeah, I would just like to make a comment that with the new regime coming into the government, I think that the concern about STRA education is going to kind of go away. I don't think it's going to be quite as aggressive as what it has been in the past. But also the other comment, and that's why I wouldn't sell STRA at this particular time. Mm-hmm. But the other comment is that I think all of the companies that you see out there that we've had huge profits for this last year, I think some of those profits are going to start to dwindle or start to go down. They're going to still be strong profits, but they won't be as strong as they have been.
That's an excellent point, Herb. In fact, as Ken and I go through the updates for all the companies we cover, I've actually noticed a little bit of trimming, a little bit of deterioration in the 2011, in some cases 2012 estimates. So yeah, I think you're right. A little push up, but all is not roses yet for many of these companies.
Mark, Ann Manning has her hand up. I'm going to unmute Ann. Ann, go ahead.
Good evening, everyone. Last week, I believe it was last week, it was Challenge Club. I mentioned that there was going to be a show on CNN about the for-profit colleges. And you'll have to forgive me because there's a lot happened in the last week with Christmas and everything. But they mostly talked about the defaults on that students are doing on the loans, and they brought the for-profit colleges into this. The biggest one they talked about was Apollo Group, which you'll have to forgive me, I don't remember what their college name is.
It's University of Phoenix.
Yes, that's right. And they talked about another one, I believe it was Westwood, or I'm not sure, but it was quite interesting because they never actually mentioned STRA, but they kept showing their name on the deal, which I didn't understand why they did that because they never really mentioned them. And I thought that was a bad rap for them. So
it could be a little bit of implied guilt by association again.
Right, exactly. But they, whoever the senator was or representative, he was still going to go after this. So, but they never really did say anything bad about STRA.
Okay, thank you very much, Ann.
Mark, we have a question from Miriam. She wants to know, how do you use par to decide whether you want to sell a stock or add to it? She wonders, if a stock goes to a par of 12, what do you do?
Okay, probably the best way to take that one, and you guys jump in if you want to add on to this. Let's go ahead and take a look at this equity analysis guide, which happens to be for Cisco, the company that Hugh McManus presented tonight. This is from that Facebook series around Christmas time. And one of the things that we've added in working with some of you who wanted some type of zoning, because we don't really do the traditional PE-based zoning that's used on stock selection guides that manifest. We actually drive all of our decisions just as you've asked with your question, based on the projected return. So here in the case of Cisco Systems, what we're basically saying is, and at the time this slide was prepared, the median projected return out there was 7.5%. So all we're doing is saying here, well, I want 7.5% plus 7.5% or 15% returns if I'm going to buy Cisco. In order to accomplish that, I would have to buy at a price of 24 or less. Now, at what price, under today's fundamental conditions, would we be talking about selling Cisco? And again, what you need to do is decide, is this a strong core holding, in which case you would hold it if the projected return dropped all the way down to around 1 or 2%. In this case, what I've selected is something in between. Much like Hugh's comments, I don't consider it an ultimate blue chip. It's still an extremely strong company, but I would sell it somewhere between that 1 and 2% range, which we would reserve for, say, Johnson & Johnson, and the 7.5% where we would think about selling a non-core holding. So again, at a 5% return, I would consider selling an existing position in Cisco, and under present conditions for Cisco, that would be a stock price at or above $37 a share. So if Cisco goes up to $37 tomorrow morning after the rest of the world hears Dan Hess's comments, I'm probably getting out. So again, you use the return on both sides of the equation to think about the type of company you're dealing with, and what type of return is appropriate for that company.
Mark, I now understand what the GoToMeeting folks were trying to tell us when they said check the status of the broker. If Hugh and Dan both say buy Cisco, it's going to 37 tomorrow, so our broker better be ready for our sell orders.
Be quick. No, I think we may have some time on that one.
So Mark, Miriam is following up. So she's asking you to conclude. Does your Eagle really, in fact, say that it's a buy right now?
Absolutely, Miriam, and it has to do with that projected return. Hughes was in the 17 or 18% range. This is from a few days ago when the stock price was still in the 1947 range. So at a projected return of 19.6, that's definitely a buy in our universe, in the way that we look at the field of opportunities or companies that are out there. So again, that PAR tells us what to do.
Mark, Ann Manning is asking a question about the rules of the roundtable. Since we've sold the STRA, will that be used now to purchase stock in the coming months, that money?
No, we actually retire it. What you'll actually see is a closed out position on the card, and we keep track of the success or failure of each individual position. So what you'll actually see is next month when we get together, this one position in STRA will be closed out. The other one will still be active, but you'll see it closed out. And no, we're not going to actually use it. We're going to cash it out and have a New Year's Eve party.
In Atlanta.
In Atlanta. Hey, we can fly from Flint to Atlanta pretty cheap these days.
And we're going to invite all the folks that have been sitting on the tarmac in New York to come, right?
Yeah, they probably are willing to go just about anywhere at this point.
I want to tell you, I drove round trip from Flint to Pittsburgh yesterday, round trip, down and back to pick up my sister who had driven from New York City to Pittsburgh to be able to get her home in time to go to work. So there's some people really hurting there in New York City. Chuck Brunell says that the party's at Si's house, and Ann Manning is making the point that Houston's much warmer than Atlanta right now. Atlanta has snow in the streets.
That's true.
But not inside my house.
Okay, that's an important distinction.
Mark, we've cleared the question box, and I don't see any hands raised at the present time, so we might be at a place where the informal session can also close down, and we can wish everybody a very, very happy New Year.
Thanks, everybody. Happy New Year to everybody, and let's rock and roll in 2011. Good luck, and everybody be safe out there.
Thanks. Happy New Year, everyone.
Bye-bye, guys.
Happy New Year, folks. And I see Julie's ready to drive to Atlanta.
Well, we have a quorum.
All right. Bye-bye, everybody.
All right. Thanks,
Bye.
Ken. Thanks, guys.